Good evening, everyone. Week 3 of 5, and we are making moves. Really excited to talk about the things that happened this week. So let's just take a quick high-level summary. At the end of week 1, I was ranked number 97, and at the end of week 2, I was ranked number 162, which was a drop of about 65 places. And then at the end of week number 3, I am ranked number 132, which is an improvement of around 30 places. Now, if you look at my balance, you can see that from 5,710 at the end of week 1, improved slightly upon that 6,861.51 at the end of week 2, and now 11,572.11 at the end of week 3. The balance, the trajectory of the account is going in the right direction. However, just as we pointed out in my introductory videos leading up to the competition, I specifically stated that there are a lot of aspects of game theory that would come in, I'm sure, to the result, and so I'm really a bit uh, excited to share those kind of aspects with you. So let's take a look. No, your eyes are not lying. That is the number one person with 1,385,605.61 for an overall total return of 38.56%. That is astonishing. Astonishing numbers. In fact, the top five numbers are astonishing. No other way to put it than that. This is all down to the momentum that we saw in small caps and penny stocks, essentially, on last Friday and some continuation into Monday morning. In fact, this the person who is now at number one put up a 1 day total of around $450,000, which is absolutely incredible. Absolutely incredible. And the reason why I say that is because this is not a typical type of move, especially given the constraints that we're working with within this particular competition, which is that no one position that you choose can take up more than 10% of your portfolio, even starting with a balance of around 1,085,000 at the end of last week, which he would have brought into this week. That still only means his max position size would have been $108,000. His max one position size would have been $108,000. So to put up a gain of around $450,000 means that if we assume that he invested it only in one security, that may be the case, it may not be, he would have had to have somewhere in the vicinity of a 400% gain, which is not at all typical um, for generally for securities. Now, it's important to note that as we mentioned last week, most of these traders in this particular competition are trading small cap penny stocks, stocks that may be 15 cents, that may be a dollar, that may be 45 cents. And so not only are they more prone to manipulation, they are also what is known as low volume or low float stocks, which means that there is not a lot of shares being traded or outstanding that is left to be available to trade on the open market. And so when news or a catalyst of some sort comes out that can affect the stock or affect the sector, prices tend to move uh, very rapidly to the upside or downside. So as a result, you have to be in the stock to experience that gain. Otherwise, price moves away so quickly from you that you are chasing. And professional money managers and traders we simply just don't chase. And so um, this is really interesting. Good to see some people making moves. And I just want to point out something for you guys really quickly. There was two people that were in the top 20 last week or the week before, with gains of 20,000 and 2% and gains of 40,000 or 4%. Let's just take a look where those people are. So there was one person, Devani, that was number 16 with a gain of 2%, around $20,600. He was ranked number 16. Number 16. Let's see if we can find him today. Okay, there you go. Number 979 out of 980 for a loss of 10.52%. Again, it is important to understand what you're trading, and I am not knocking penny stocks, small caps, or speculative trading vehicles. What I want you to be aware of as a learning tool in watching this video is understanding that there are many, many, many ways to skin a cat when it comes to trading and investing. As many investors as there are trading strategies and methodologies, but all of them are not made equal. In fact, what is common to all is that you must have strong risk management, but particularly in securities that move quite quickly on in a short period of time, such as low float penny stocks, low float um, small cap stocks. Your risk management has to be in tip top shape because prices move away so quickly from you. You find yourself chasing price to try to get a fill to get out if you're losing, or to try to get a fill to get in if an upward movement is coming. So this person went from a gain of 20,000 to now a loss of around 115,000. So overall, a negative 13% move in just simply a week and a half. Now, I don't know if he or she was doing anything differently, but simply because of the type of investment or trading vehicle he's using, these are the types of moves that can happen. So just as you can go large to the upside, clearly, evidently here is just as you can go large to the downside. Let's take a look to find the person who was number 2, who had a gain of 40,000. Where is he or she? Bum, 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 bum. So there we go. At number 92, for an overall gain of 1.78%, 17,000, but of course a decrease from the 40,000 that they had weeks before. So and notice the separation between the sorts of numbers that are being put up. He or she is now number 92 with a 1.78%, having dropped down about 23,000 in the past week and a half. This middle area of around from number 51, 28,000 to all the way back to where I'm at 132, is just about 16,000. And if you go down even further to number 150, which is at about 10, so you have about a 20,000 or 2% difference in account size. Now, here's where the game theory comes in. With 2 weeks to go, what do? If you're in the top 20, you're outpacing the competition by some bit. But we know because of the nature of the securities that these people are trading, one person can put up a day of 50, 60, 70, 80, 100, 200, 300, 400,000 and move all the way from number 980 all the way to the top at number 1. So at the top, do you continue to keep pressing for more gains, which exposes you to more risk to both the upside and downside, or do you just keep steady where you are, hoping that other people are going to have, fear of missing out, trying to overtrade in order to try to get higher up the ladder? What are you going to do? Now, if I were some of these people, I would sit still. And I would observe, especially if I was in the top 5, because I would not want to risk taking on a trade or series of trades that would push me back down to um, out of the top 20. Of course, remember, based on the competition rules, only the top 20 progress to the next round post October 31st. So that's that. What do I have to do here? At this point, again, I am not a small caps trader. I'm not a penny stock trader. I'm not familiar with that environment. That's where I first started many, many, many years ago, over a decade ago now. But that is not something that I trade in my day to day. Personal portfolio is definitely not what I I used to put clients into, and in fact, I don't trade stock at all. I don't trade stock hardly at all. I exclusively use derivatives. So this competition is a good test of the transferability of skills from one type of trading to another. But what is common to being successful is playing to your strengths and understanding market environment and the use of risk management tools. And in this case, I'll go back to this slide where you can look at the number of trades that I've had for the week. In the first week, I sort of was out of the gate, had a lot of ideas. I put 6 trades on, but then I slowed down in week 2 because the environment worsened. And then in week 3, I was at around the same number of trades, and in fact, I only have 1 trade left on in the account, and that'll lead me to talking about what I plan to do next week. So as you can see, the only trade I have in the account currently is Twitter. And why am I even long Twitter, you might ask? Now, that is an excellent question. Why am I long Twitter? Well, to be fair, as we understand it, based on my position in the competition at this point, I need to make moves that are outsized, that are not typical, that are large, that I need to have percentage gains that allow my account to appreciate in such a way that I can challenge the contestants ahead of me. And so Twitter actually has earnings coming up on Thursday, and an earnings report is probably one of the major, not probably, is the or one of the major, depending on the particular stock or sector, movers of a security, because that is when investors get new information with which they're able to develop opinions about the stock, whether they want to go long, whether they want to go short, whether they want to add, whether they want to sell. And so I'm playing speculatively Twitter for a run up coming into earnings. Now, what's going on with Twitter? Twitter, as you can see here, has been having a good year. It's been having a good year. It is clearly in a defined uptrend. And simply what I'm playing for is people speculating for a bounce into earnings. And so we may have possibly a retest at around, what is that? Where did it open? At around 41, 46. So that's what I would be targeting this week. This level right around here. That people are going to buy Twitter up into its earnings. I'm not sure that I'm going to hold into earnings, although if I did hold, that would be possibly a volatile event to the upside, but also to the downside, and so I'm not willing to take that risk. And so I will be, if I do get to 41.50 by Thursday, then I will be taking profits at that point. Twitter. All right, guys. So that's basically the rundown. That's basically the wrap up. I am looking to make moves next week. I am have Twitter in the account, but I'm also keeping a sharp eye on opportunities to make some outsized gains and moved up the rankings this week. Thank you. Hope you enjoyed. Look forward to next week. Bye.